What is the best Vanguard ETF to invest in? So ETFs are a very powerful tool to get started with investing. They provide a very simple way for new investors to get involved in the stock market while still giving them exposure to the broad market and multiple stocks that they might not be able to afford or handpick individually. This, of course, gives them exposure to different industries, different sectors, and the end goal, of course, is to provide them with great growth over the long term. There are many large institutions that offer ETFs like Vanguard, BlackRock, or iShares. But today in this video, we're going to take a look specifically at Vanguard, specifically 4 different ETFs, and figure out which one is the best ETF stock for you to invest in. There are so many ETFs to invest in, and although ETFs are designed to make it easy for the investor to just go and choose and just forget about it, it's hard to make that first decision on which ETF you want to choose. It can be really overwhelming, and if you take a look at Vanguard's website, for example, they have something like 56 different ETFs that you can choose from to invest in. So to keep things simple, let's stick to US-based companies and US-based ETFs. And I've actually gone ahead and picked 4 different ETFs that I believe are great performers in this space. And let's walk through each one of these and see which one performs better over time, the cost of owning each one of these, and the different holdings and other things related to each one of these ETFs. So up here on the screen, you can see that we have 4 different ETFs that I just mentioned. First, we have the Total Stock Market ETF, which consists of 3,629 different stocks. Then we have the S&P 500 ETF, which comprises of 508 stocks. Then we have the Large Cap ETF, which comprises of 601 different stocks. And finally, we have the Growth ETF, which comprises of 300 stocks. So according to Vanguard, all 4 of these ETFs fall in the category of moderate to aggressive risk potential. However, if we take a look at their top 10 holdings for each one of these funds, you can see here that they own a lot of big names like Apple, Amazon, and Google. So that gives the investor a lot more confidence when investing in these ETFs because these are well-known brands, well-known companies, and well-established companies that are for the most part profitable as well. Now, if we look at the fees that these ETFs offer, you can see here that the Total Stock Market and the S&P 500 have a slightly lower fee of 0.04%, while the other 2 have a fee of 0.05%. But now to really make our final decision on which of these 4 you want to pick and have in your portfolio, we really have to look at their performance, say year to date, the last 3 years, the last 5 years, and even the last 10 years. So again, looking at this chart, year to date, the only fund that is really up is the Growth Fund with a 1.22% return so far, while the others are down, but they're not down that much. They're only down around 1% or lower. However, you have to keep in mind that this is a very short time frame, and when people invest in ETFs, you should be going in there with the mindset of a very long time frame, in my opinion. You want to look at things like at least a 3-year, but most likely a minimum 5-year hold, and sometimes even a 10, 20, 25, 30-year hold depending on your age. So now again, if we look at the 3-year performance, we can see here that the Growth ETF is again the best performer with 11.08% return. And for the 5-year, you can also see that the Growth ETF is at a 14.32% return. And finally, for a 10-year, you can see that it's also the top performer here, the Growth ETF, with a 10.81% return. Now, before you go out there and choose your Growth ETF, because it does look pretty good from this data, you have to keep in mind that we have been in a bull market for the last 10 years. Now, if you're not familiar, in a bull market, growth stocks typically do much better than your regular stable companies. That's because there's a lot more potential for these growth companies. The economy is a lot more forgiving. People invest in them even if they aren't profitable. And there's a lot of hype around these companies. Now, as a contrast, when we do enter a recession, whether that's this year, next year, 5 years from now, wherever that may be, growth stocks typically get hit the hardest because a lot of them are not profitable companies. So all of those returns that you may get over the next few years until we do hit a recession, they could all be wiped out in no time because, like I said, these type of stocks get hit pretty hard and investors start fleeing these kind of stocks because they're not sure now in a recession if these companies will be able to still sustain themselves and not go bankrupt. So just keep in mind that just because this ETF, the growth ETF, has performed well in the last year to date, 3 years, 5 years, and even 10 years, it does not necessarily make it the best performer over the long term. So now another thing to keep in mind is the way that these 4 funds diversify their holdings. So looking at this chart, you can see here that most of them have a heavier weight in financials and technology, but the growth ETF has put a higher weight on consumer cyclical stocks and less weight on financials. So what I would suggest is to take a look at this chart, maybe even look up all of their holdings and their portfolio allocation for these holdings, and figure out which one you agree with most to help you with your decision. So now I've presented you with the facts, and it's up to you to pick which one suits your needs. If I had to choose one, I would just stick with the S&P 500 because these are the 500 or 508 largest companies in the US, well-established companies, well-known brands, profitable companies for the most part, and I don't think a lot of them are going to be going anywhere anytime soon. Even during a market downturn or a recession, I think that the S&P 500 index will actually get hit the least out of these 4 picks. So that's kind of why I'm leaning more towards that fund as opposed to the other funds. But which one you decide to go with is completely dependent on your risk tolerance. Again, like I mentioned, I know a lot of you will think that the growth ETF is probably the best one to go with here because it has had the best performance over the last 10 years. But I do want to stress again that we are in a bull market, and when we do enter a bear market, I suspect that this particular growth ETF will get hit the hardest out of the 4. Make sure to hit that subscribe button down below if you enjoyed this video. I'll be making more ETF videos if you guys enjoy it. Drop a like on this video as well. And make sure to join our new Facebook group, Positive Investing, and follow our Instagram account as well, positive_investing. Both completely free and both a community that we're building up together here where we can discuss our new positions, new picks, and anything stock market, investing, or personal finance related. Either way, guys, thank you so much for watching, and don't forget to invest positively.